Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we are analyzing an interesting comparison that has been circulating in financial discussions: the idea that Vietnam's recent corruption clean-up, infrastructure push, and efforts to reduce currency in circulation could be happening alongside potential monetary adjustments in Iraq. Some observers are drawing parallels between the Iraqi dinar and the Vietnamese Dong, suggesting both currencies may be approaching significant changes. In this report, we will break this down carefully, look at the fundamentals, and explain what this actually means for serious followers of Iraq's economy. Let's begin with Vietnam. Over the past few years, Vietnam has undertaken a sweeping anti-corruption campaign. This campaign has targeted high-level officials, financial misconduct, and inefficiencies in public spending. At the same time, the country has aggressively invested in infrastructure, including transportation networks, manufacturing hubs, and export-driven industrial zones. Vietnam has also managed monetary policy carefully, working to control liquidity, stabilize inflation, and maintain export competitiveness. When a country reduces currency in circulation, it is often attempting to manage inflation, strengthen monetary control, or prepare for structural reforms. However, reducing liquidity does not automatically imply a sudden or dramatic currency revaluation. In most modern economies, exchange rate adjustments are gradual, policy-driven, and aligned with trade balances, foreign reserves, and overall macroeconomic performance. Now let's shift to Iraq. The monetary authority in Iraq, the Central Bank of Iraq, has also been pursuing reform. Over the past several years, Iraq has focused on tightening foreign currency transfers, regulating dollar outflows, enforcing compliance among banks, and strengthening anti-money laundering measures. These steps are not random. They are part of a broader strategy to stabilize the financial system, increase transparency, and protect foreign reserves. Iraq's reforms have included modernizing payment systems, introducing electronic platforms for foreign currency transactions, and reducing reliance on cash-based transactions. Efforts to control the parallel market exchange rate have also been central to policy decisions. By narrowing the gap between the official exchange rate and the market rate, policymakers aim to enhance credibility and investor confidence. When we compare Iraq and Vietnam, we can identify similarities in reform themes: anti-corruption drives, financial system tightening, infrastructure development, and improved fiscal discipline. However, it is important to recognize that each country operates within its own economic framework. Vietnam is a major export manufacturing hub integrated deeply into global supply chains. Iraq, on the other hand, remains heavily dependent on oil revenues and is still diversifying its economic base. The suggestion that both the Iraqi dinar and the Vietnamese Dong could move at the same time requires careful scrutiny. Exchange rate policy is determined by domestic economic conditions, external balances, foreign reserves, inflation trends, and strategic policy goals. There is no formal linkage between Iraq's currency policy and Vietnam's. These are independent sovereign decisions. In Iraq's case, any adjustment to the exchange rate would likely follow improvements in several key areas: sustainable fiscal balance, stable oil revenues, strengthened banking compliance, increased non-oil GDP contribution, and improved investor confidence. The Central Bank of Iraq has consistently emphasized monetary stability as a priority. Stability often takes precedence over rapid appreciation. Short term, what do these reforms mean for Iraqi dinar followers? In the immediate horizon, tighter regulation of dollar flows and enforcement of official platforms suggest continued efforts to control currency volatility. We may see incremental adjustments to policy tools, but there is no confirmed evidence of an imminent dramatic revaluation. The short-term focus remains exchange rate stability, compliance enforcement, and inflation management. For long-term implications, the picture becomes more strategic. If Iraq successfully reduces corruption, strengthens infrastructure, expands industrial capacity, and increases non-oil exports, the structural foundation of the economy improves. Over time, stronger fundamentals can support a stronger currency. However, that process typically unfolds gradually and is supported by macroeconomic indicators rather than sudden announcements. Vietnam's experience offers an example of disciplined economic management rather than rapid currency appreciation. The Vietnamese Dong has historically been managed carefully to protect export competitiveness. Even during periods of strong economic growth, authorities have avoided sharp revaluations that could harm trade. That lesson is important for Iraqi dinar observers. Growth and reform do not automatically translate into abrupt exchange rate jumps. It is also worth noting that reducing currency in circulation can serve multiple purposes. It may combat inflation, limit speculative behavior, or transition toward digital payment systems. Iraq has also been working to modernize its banking infrastructure and reduce cash dependency. This is a modernization strategy, not necessarily a signal of immediate currency revaluation. Another factor to consider is foreign reserves. Iraq's reserves have been supported by oil revenue inflows. Stable or rising reserves provide monetary authorities with flexibility. However, they also use these reserves to defend exchange rate stability. Any major shift would be calculated carefully to avoid economic shocks. Global economic conditions also matter. Oil prices, regional stability, US dollar strength, and global monetary policy all influence Iraq's financial decisions. The Central Bank of Iraq operates within this broader environment. Even if domestic reforms are progressing well, external conditions can delay or influence the timing of monetary adjustments. For Iraqi dinar followers, the key takeaway is this reform momentum is a positive signal. Anti-corruption efforts, infrastructure investments, and financial tightening indicate institutional strengthening. These are prerequisites for long-term currency confidence. However, responsible analysis requires distinguishing between structural reform and speculative expectations. In the short term, stability remains the most realistic outlook. In the medium term, we may see gradual adjustments aligned with macroeconomic improvements. In the long term, if Iraq diversifies its economy, increases private sector growth, enhances transparency, and strengthens trade integration, the dinar's value could reflect those stronger fundamentals. It is important to approach comparisons between different countries with caution. Vietnam's trajectory reflects decades of export-led growth and integration into global manufacturing networks. Iraq's trajectory is shaped by post-conflict rebuilding, oil dependency, and financial system modernization. While reform themes may sound similar, the economic contexts are distinct. From a financial analyst perspective, the most encouraging sign for Iraq is policy consistency. Regulatory tightening, banking reforms, and anti-corruption initiatives demonstrate commitment to institutional improvement. Markets tend to reward credibility over time. Credibility is built gradually through disciplined policy, not through surprise announcements. As always, we emphasize responsible interpretation. There is no confirmed coordinated timing between Iraq and Vietnam regarding currency policy. Monetary decisions are sovereign and independent. Speculation about synchronized revaluations should be viewed cautiously and analyzed through economic fundamentals. For viewers following Iraqi dinar developments, focus on measurable indicators: inflation data, foreign reserve levels, fiscal budget performance, non-oil GDP growth, and official central bank communications. These provide real insight into the direction of policy. The broader message here is that reform is a process. Iraq's economic rebuilding continues step by step. Infrastructure projects, digital banking expansion, anti-corruption enforcement, and regulatory modernization all contribute to long-term stability. These are constructive developments that strengthen the foundation of the Iraqi economy. At the same time, patience and realism are essential. Currency markets respond to structural strength over time. Sustainable appreciation, if it occurs, is typically supported by years of economic discipline rather than single announcements. We will continue to monitor official statements from the Central Bank of Iraq, fiscal updates from the Iraqi government, and macroeconomic indicators that provide credible signals about the direction of policy. Our goal is to present balanced, factual analysis without exaggeration or speculation. If you appreciate responsible and factual Iraqi dinar coverage, make sure to subscribe to the channel and stay updated with verified economic developments. Remember, this content is provided for informational purposes only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial professional before making any investment decisions.